Well, let's go ahead and get started. Welcome back, everyone. My name is Rishi Jaluria. I cover enterprise software here at RBC. I'm delighted to have Andrew Casey, who's the CFO of Amplitude. Andrew, thanks so much for being here.
Thank you for having me.
Maybe let's jump into things. Just start with a little bit of an overview for Amplitude for the generalists in the room. And you've been there for, how long has it been now?
A little over a quarter.
Yeah, okay. So what brought, tell us what attracted you to that opportunity.
Yeah, so first I would probably, real quick, I mean, my history in the Valley has been long and extensive. I'm older than I look, but I started at Sun Microsystems, went to Oracle, went to Symantec, went to HP, was at ServiceNow for a long period of time when nobody knew who they were. And then I went on to WalkMe, helped bring them public. And then went to a company called Lacework, which we just sold to Fortinet not too long ago. And then just came to Amplitude. Now, someone very wise, who I respect a lot, told me at one point, you really got to love the problem you're trying to solve. And I really agree with that. And there's a lot in what Amplitude does is about helping companies better service and provide greater digital experiences to their customers. So it's this notion of that the technology is in the service of providing businesses the capability to drive greater efficiencies, greater monetization efforts, and building a rapport with their customer base that really makes them want to interact with the customer, the brand, the website, the application, et cetera.
Yep. Awesome. Maybe let's talk about the competitive landscape. What are you seeing in terms of trends? Who are you competing against? Why are you winning? I know that's a lot of questions stacked into one.
That's okay. This is like earnings all over. I think the first thing I would tell you is Amplitude got start really focused on building better products. So anybody who's building an application, a website, a digital experience, is about how do we better instrument that and get feedback and understanding customer sentiment so that you can make that better and better and better. Think about like an app creator that's creating a feature set and you want to know, hey, our customers actually interacting this in the way we thought they would and getting value from it. Yeah. So that's the foundations. And it's slowly but surely expanded into more and more use cases that you commonly think of as like a marketing analytics, a customer analytics, a experience analytics. Increasingly I get where we have what we call the company called Windwire. You see deals come across, and the first thing I go to is what's the use case? What are they doing? And increasingly you see use cases that were not that foundation. They were very different. It's how customers are interacting with a kiosk at a retail site. Okay, well, wait a minute, that's a whole new venue which you're collecting customer information, you're having an interaction that before people were guessing how to best to represent that as opposed to, trying to figure out, how best to serve them. I saw an interesting one that came up is that, and I'll let the customer remain nameless, but on the kiosk, they're actually starting with not what do you want to see on the menu, but how much are you willing to spend today? Yeah. Right? So they're appealing to a price-sensitive person who's trying to potentially feed their family, right? And then they show them the menu items that best align to that price point.
Interesting.
Right?
Kind of what you did the other day. I kind of want to try this kiosk out now, but that's super cool.
Yeah, so that's a different use case than we've ever seen before. But by the way, it's knowing and interacting with their customers that they came up with that different approach.
Yeah.
And so whether you think of that as like, we talked about on our earnings call, a major sports league developing a whole new way for fan experience. And it's going through their digital app, they're on their mobile app, and they're tracking everything that's going on in there. And they're doing gamification. It's not a far reach from there to say, hey, want to go to FanDuel? Want to go to Fanatics? Want to go, that you can add more and more services. We actually just contracted with a major automobile provider. Why? Because the automobile is coming a place where you can have increasing digital interactions, right? I want to order from the common pizza place on the way home. Boom, here's the order you did last time. Boom. It's those types of interactions that people want to make sure they're providing to their customers in a more effective way. And so Amplitude increasingly is becoming the underpinnings of that analytics layer that provides insights and information back to businesses to do optimizations. Now, one thing we did this quarter, which was we moved even further into how do you drive the action as well. So we acquired this company called Command AI, and then they're in the space that you would formerly think of like Pendo and WalkMe in, but we're taking an approach where it's really the combinatorial between the analytics and those insights, and then driving it to where it becomes more and more automated. Like it's not requiring user interaction; it actually enables machine-to-machine interaction associated with it. So there's this whole area that's evolving from an analytics space, but if classic competitors you want to think of, marketing analytics would be Google Analytics and Adobe. In the long tail of, call it experience analytics, which has got a big umbrella over it, but product analytics, experience analytics, and all these other web analytics areas, that's companies like Mixpanel and Full Story and Optimizely and Pendo's in that space as well. And when we've developed additional products that surround the analytics core, and it's our view that analytics is the core and that you're adding all these services around it, you can draw lines right to these other independent companies that enterprises have contracted with and stacked up in their environment. So, well, wait a minute. Amplitude does session replay. Oh, Full Story does that. Amplitude is doing A/B testing. Oh, Optimizely does that. And so we believe that we can drive a consolidation in that marketplace. We believe that we can go forward and say we can give better user experience, greater value for the money, but not just in licensing terms, but also in total cost of ownership and optimization of workflows. And so that whole space is one that is ripe for consolidation. And then on the more classic side, where a lot of companies, especially enterprises, have started their foray into digital experiences, we call marketing analytics. How do you best manage and optimize advertising, campaigns, website conversions? That's where you see Adobe and Google a lot. And so that's a whole nother market for us that we're starting to see more and more customers who are wanting to start their foray and getting a modernized approach to it. They're looking at Amplitude.
Yep. Okay. Super helpful. Maybe a couple of threads I want to pull on there, but first, since you brought up Command AI, how do we think about the path to integrate the asset, drive better cross-sell, and ultimately, what sort of uplift to revenue do you anticipate seeing?
So here's a great thing, let's take a step back, like from a more philosophical approach to how do you determine whether you're going to acquire something or whether you're going to buy it.
Yeah.
So first, I would tell you, it's got to be a functionality you can see on your roadmap. Like you really think that this is something going to augment your overall strategic objectives, strategy, growth areas. And we had a lot of customers, a lot of larger enterprise customers starting to ask us, like, this is something that we really would like you to integrate within your platform. They weren't telling us to go acquire somebody. They're saying, hey, are you going to fund this at some level? And so we did the buy versus build analysis and felt like time to value would be better if we had acquired something. Command AI had great technology, a very small customer base, good team. And I would tell you, there's only three reasons that an enterprise software company acquires another, and that's customers, the technology, or the team. And sometimes you get two and three together, and that makes magic, right? And they already had a lot of integration work had been done on Amplitude. That was their core analytics platform that they were leveraging to provide their service. And we'd already had a number of conversations from an engineering side. So we knew that it was an easy integration from a team perspective. And so I can tell you right now, the lift is one where we're going to make sure it works very, very well within the Amplitude environment. Like the user experience is going to be better than having to do complex integrations and API calls and those types of things. But we're expecting to actually have a combined offering, in the first quarter.
Nice. Okay. Maybe I want to think about the environment now. So Amplitude went public, direct listing, if I'm not mistaken.
Yes.
At kind of, I would say, peak digital transformation.
Yeah.
Obviously, macro has been a little bit soft since then. How has the market been different since going public, and maybe even in the 1 quarter since you've joined?
So certainly there's been a notion. So the other thing you probably need to understand about Amplitude is because of the way in which we've brought product analytics to bear and the targeted personas you're going after, you'd find that there was a lot of startups, digital first technology companies, the ones be adopting us. And by the way, that's a good thing. I mean, for every one of those startups that goes bust, there's one that makes it, and you want them to be singing your praises like, hey, this is the foundations and the essential part of my business. And there are those that are out there. So that's where we got started. So you see, as we started building the business and even towards IPO, there was a big concentration of digital natives, SMB, what you consider mid-market size companies that were using us. Okay? And there was a smaller enterprise, but most of that was still, a PLG related motion or SDR related outbound motion that generated the demand. Fast forward to, gone through the trough of, hey, SMB going out of business, mid-market, digital native being out of favor, or even front office being out of favor. And, frankly, a number of missteps with respect to how we leaned into selling to some of those bigger digital natives. And I would tell you that there's definitely been a pivot to invest more and more resources on the sales and go-to-market side on targeting large enterprise clients.
Yeah.
Because each of them has their own digital transformation aspirations and relative maturity. And there's no reason why Amplitude shouldn't be a part of that to make sure they're doing an effective job at getting returns on the investments they're making. So that's kind of the big difference. And I would tell you, we're still strong in that digital native startup mid-market size, but over time, I would tell you that our enterprise business is going to be a larger and larger component of our overall ARR. And I don't have a really good breakdown for you on what that percentage is yet, and it's because we're kind of redefining what that means. But I will tell you, I will disclose that because as we get more and more enterprise business, gross retention gets better, net retention rate gets better, contract duration gets longer, and sales becomes more productive. Right? Because you don't have to renew everything every year. Yeah. And so those are kind of the monumental shifts around. Now it started before I arrived, which was good because Thomas Hansen, the CEO president, is actually one who sung my praises to Spencer, our CEO, and he wanted a strong CFO partner to help him in this journey.
Yep.
And he's made some good progress. I think we'll make more progress now that we're working collaboratively on how best to do it and how you're going to allocate capital and how you're going to manage the business more effectively.
Yep. No, that sounds great. Maybe let's talk a little bit about Gen AI and agentic AI. Obviously, a huge focus throughout this conference. Maybe can you talk about where do you see the largest opportunities for Amplitude, and maybe where's there, kind of the low-hanging fruit in the near term that isn't just, visionary 5-year plans?
So I think a lot of it comes from, and so I think Spencer said this really well. He said, look, first of all, AI and generative AI, it's still software. Yeah. Right. Okay. So I don't think there's anything we can disclose broadly, but there are a number of the well-known AI companies out there that use Amplitude to best understand how people are interacting with their models. So it's just software, and people use Amplitude to make their software better. Right. So that's part of it. Could that be something that gets subsumed over time? We don't think so. We think that certainly Amplitude gets better and better, but it's kind of like and I'm going to date myself really badly, but I remember back at Sun Microsystems, we were talking about the network is the computer, and you never bet against bandwidth and the ability of the network to take on more and more capacity applications. Now we know that's fait accompli. It's actually the case. I don't think you ever bet against the pace with which data is going to be added and expanded from all these different sources.
Right.
And so the notion that AI is going to be able to handle all of those things based on its fundamentals today without ever growing and changing, it's just not reality.
Yeah.
So Amplitude is already, got some what you would consider machine learning, artificial intelligence built in. Certainly Command AI even brings more. And the first implementations that I think that are some of the most effective is where you see workflow optimizations and you see automated insights happening. So it's not just that, hey, Rishi, you came to the site and, would you like a discount? No, it's, hey, we saw you were looking at that black shirt and we didn't have it in your size, but do you want to come back when it is? And then maybe you don't respond. Well, it comes back again. Hey, now it's on sale. Now it's Black Friday. What about it now? So there's the way to interact and get better and better at driving those conversions. And that's just one use case. But you think about it, how that doesn't need to be instrumented anymore. It just becomes part of your cohort that you're managing in a certain way. And the more you can get refined in personalization, the more effective you tend to be.
Yeah. No, that makes a lot of sense. Maybe just kind of continue to pull on that thread. You talk a lot about kind of the data that gets generated from this. Do you work better with structured, unstructured data, or is it kind of across the board? You can benefit from all the different data sets that get created from this?
It's across the board, and I'd say we're somewhat we're not aligned to any one. I think you think about it, we're very much a horizontal. I think there's definitely times when we were talking about unstructured text data and how you can mine that more effectively and get customer sentiment from that and use that in different ways. But I'd say there's lots of different data sources, and the more there is, the better and more uses for analytics around it.
Yeah. Okay. That makes sense. When you think about your existing customers on Amplitude, what sort of growth do you see them within the platform? Is it land and expand? Are you seeing customers maybe land on larger deals up front? What are you seeing on that dynamic?
So I'd say historically, we were a single product was analytics, and the vector on growth was simply more events consumed. So more data sources, more events, and essentially that was a proxy for usage and customer value. Over time, I think that's changed a little bit, especially since the customer profile increasingly that we're targeting is more enterprise related, and they're looking for a little bit more structure and framework to how they use that data. And so you got then session replay and experimentation and, a customer data repository and guides and surveys. And, so you got all these other aspects of how do I use that data and put it in the right hands for the right persona within the enterprise to do their tasks, whether that's the marketeer, that's the advertiser, that's the sales rep, that's you do all these different areas and you leverage that data feed. So the sales motion is one still that we would land with a core analytics use case, more than likely.
Yeah.
And that could be multiple different types. And then if we do our job and we generate value for that initial implementation, we earn the right to showcase what we can do in many other places. So Realtor.com is somebody we talked about on the earnings call. They start with an analytics implementation, and they had Launch Darkly, Optimizely, Full Story all around their analytics. But they increasingly realized, wait a minute, I still have to do all these integrations. And what is like replace them all? So within a 4-month period, they basically said, I'm getting out of all those ones and moving to Amplitude.
Yeah.
And so that land expand model is one that's very classic for an enterprise. Historically, we didn't have the multi-product to go do it. Now we do.
Yeah.
And I would say that innovation process and focus isn't going to stop. So I think it becomes more and more prevalent, along with the targeting. Like we're going after those enterprise clients that have the propensity to use us in that way.
So maybe I want to continue on that thread. So we think about maybe the focus on these upmarket enterprise deals. How have you had to adapt your go-to-market as a result of that? And what sort of benchmarks are you tracking internally to measure your own sales execution?
Yeah, so I tell you, it's a very different motion. I would from our foundations, we're PLG related, and I would tell you, there's a lot of companies who would say, I use Amplitude as the underpinnings of our PLG, and so. And I don't want you to think that we're moving away from that. I always tell people in the Valley, stop thinking in binary terms, and think in how you actually optimize those frameworks. But we did have to be mindful about moving from a very transactional sales process. In the Valley, if you've hopped around enough, you'll find that there's a pretty much a lot of consistency that the VCs have used, which is the John McMahon MedPick approach. Like how do you identify the customer, understand the 3 whys, and convert them quickly, right? And that's also usually associated with a single product, right? And that's great for like the first 0 to 50 million. But once you start moving into multi-product and you're doing with multiple personas, it starts to break down because sales cycles are much longer in an enterprise. They're more like 9 to 24 months long. And sometimes they're gated by the budgetary requirements or the contract that are coming up and due. And so you have to adjust your sales process as well. It's like, well, what are the sales and stages and criteria? Are we actually following that? What's our pipeline coverage and maturity associated with those sales stages and criteria? What's the relative conversion rates associated with the sources of pipeline we have? You start instrumenting these things that didn't really matter when you had 3 to 6 month sales cycles.
Yeah.
And it's because the longer that an opportunity is in the funnel, it costs you more, right? And you want to disqualify as soon as possible so that the reps can actually focus on the things that really matter and have higher conversion rates. So I would tell you, we're still, we're 300 million. I'd still call that a relatively small company.
Yeah.
When I joined ServiceNow, we were a little under 400 million. We didn't have a functioning CRM. We didn't have a sales comp system. We didn't have a pricing strategy. We didn't have a partner ecosystem, but we built it with the mindset of we're going to continue to grow this and focus on the right things and be really ruthless about areas that are not showing return. I would say the culture of companies that were funded during the heyday, they didn't always have that ruthless focus on driving accountability and return.
Yeah.
And I think that's what Thomas and Spencer really want from me.
Yeah,
to help them not be ruthless, but maybe a little.
Yeah. All right. Maybe on the topic of some of the newer drivers. So you've got now Web Experiment, Amplitude Made Easy, both in their early days. Any kind of signs of traction with those product or early signs of success?
Yeah, I tell you, experimentation is one of the best add-ons we have. It's a very logical extension from our core product and persona. When the product analytics, well, let me go test, the feature set and capabilities in this environment and see what would be best on placement, content, simple things like font, color, those types of things. So that's a logical extension. And we're doing that's in my mind, that's the most easy thing for a classic seller analytics to upsell into experimentation. Probably followed by session replay, which is, people are very visual. Session replay allows them to do that. Um, the But it does take some time to get there. I think that you have to train and transition a sales force that is used to selling one value proposition, expand it to a much broader and a more of a roadmap sale, because enterprises will not think about just typically one thing. They'll think about, how does this one thing interrelate to all the other outcomes I'm trying to drive? And is there a real roadmap? Can I trust this company to actually go deliver on it? So there is some basic differences around it.
What learnings can you bring from ServiceNow, right? That went from we do one product, we do it really well. Obviously, it was a platform from the beginning, but started to go in all these adjacencies and it became the behemoth we know today. Any learnings you can take from here?
Oh yeah, there's a litany of them. Well, first and foremost, I'd say this is especially the case when I went to WalkMe and to Lacework afterwards. It's so important to have an aligned executive team and focused on the strategic objectives you have, and how well that then transcends into prioritization and capital allocation, and how you're managing the business. I will tell you that I'm teaching even my FP&A team how to think about the instrumentation and feedback that I want to have on a monthly basis that allows me to pull levers on the business and generate the most outcomes. So aligned executive team. Two, I would tell you, is you go into multi-product. Everybody thinks that their product is better than the whole. The product managers do, and if you let a product manager run their specific area only and not have guardrails, constraints about not instead of optimizing the company, then you get bad behaviors, bad outcomes.
Yeah.
And pricing and packaging is a great example of that. At ServiceNow, when we first started doing the pricing and packaging, I remember quite vividly being in this meeting with these product managers, and if they had food in their hand, they would have been throwing it at each other with regard to the standardization on meters and the value proposition of their product versus others in bundles. You name it, they were sub-optimizing ServiceNow and not thinking about how best a better together strategy was going to be. And so we had to come out from that meeting about developing the pricing and packaging strategy. And I was the sacrificial lamb from, at that time I was running sales operations. I was the sacrificial lamb from sales operations to go in and give them the sales perspective on things. Yeah. Well, it took a little while, but none of them wanted to go take that up on their own. So they said, "No, why don't you go do it? Give us the view of it." So I came back and they hated it at first. They hated it because I didn't allow any of them to be thought of more than the other, in a construct. And my construct was more about what the customer would want as they adopted, reducing the barriers to adoption, driving towards a clarity on how to align to their value propositions. Each customer has a set of objectives and why they're investing in software. And it was our job to try to make sure that we articulated that through the pricing and packaging and the deal constructs that gave them the perception they were getting value in advance of what they're paying for. Okay. Now the product managers hated it. Okay. So I went away from that meeting and kept telling them, and this is the way. Then I started testing it. Started, actually letting the sales reps actually package and sell that way. Guess what? Started making progress. And everybody said, "Whoa, it actually works. Let's do it." And so that then came about. There was no multiple meters. There was a single meter architecture. We broke down, and I don't even know much about ServiceNow, but they went from a structure where you had different roles, role-based pricing, which basically somebody was requesting something. This is an IT service desk model. Somebody's requesting something, somebody's approving that, and somebody's actually doing the fulfillment, the IT administrator. Well, the more you roll out different products, for the CHRO, for the customer success organization, the customer service organization, the more you roll it out, suddenly these roles become, you may have like 6 different roles. Okay. Well, that's not going to work, right? Because that requires a whole bunch of administration that you don't want to, push that onto your customer. You want them to be able to find it and have the ability to adopt and use. And so that was really the big lift. It was this notion of, wait a minute, we're actually not worried about moving into ServiceNow and using it for whole these different use cases that we certainly had the vision that you could outside of IT, but there were barriers to that type of growth, and we were trying to remove the barriers. Yeah. So once again, I would tell you that's a long-winded way of saying we have similar types of growth and efforts to go do as well. And pricing and packaging is one of them that we'll work on. But it starts with really having a clear set of objectives and being aligned, and having a really strong interdependency of processes, a little bit more rigor, driving accountability, and those show up in the various ways in which you manage the company.
Yeah. No, absolutely. You had mentioned WalkMe earlier, with their acquisition. Have you seen any changes in the competitive environment or influx of customers or anything like that?
So WalkMe was, and you probably remember this, but it was very interesting. It was a company that started really about teaching people how to use applications more. It was more of an in-app learning environment. Now, when I was at ServiceNow, I was a customer of WalkMe, and we used it for business process automation and sales transformation. I talked about pricing and packaging. That was actually a WalkMe use case that by using WalkMe, we knew where it was breaking down and where adoption wasn't occurring, and we changed it, we fixed it, and it drove the right result. So that's certainly a use case that we could get into. It's not what we focused on when we acquired Command AI. We were much more focused on the external use cases, call it the website optimizations, the revenue optimizations that would happen through the apps themselves and understanding customer sentiment rather than trying to do in-app efficiency and optimization. Is it one we can lean into over time? Absolutely. Yeah. But so I wouldn't say we've seen an influx of WalkMe related customers coming forward and asking us about it. But I'm sure we will at some point.
And maybe tying that to a comment that you made at the very beginning, what do you think gives you the right to be the consolidator rather than the consolidating?
I think the product.
Yeah.
I think that's how you earn that right. You have to have a great user experience, a great product that drives the right outcomes. There's really nothing else that engenders, whether you have the right to go do it. I think it's not enough though. I mean, being in technology for as long as I have, I can tell you there's plenty of instances and examples where there was a better technology, but really poor execution. And so we may have the ability and the opportunity right now because we have a great product and it continues to get better. But if we don't seize on the opportunity, then we'll lose it.
Yeah. Yeah, no, that makes a lot of sense. Maybe let's turn to margins now for a second. Obviously, in this environment, more focused on at least demonstrating a path to profitability, showing margin expansion. Started obviously see that here at Amplitude. Maybe walk us through how we should be thinking about future levers for margin expansion without compromising growth.
Yeah, so I would tell you that let's think about in terms of the various areas first, like you said. So first on gross margin, I think that as we get more and more usage of the platform, the marginal incremental cost associated with serving customers goes down. Now, that's despite the fact that you have all these data elements exploding. But the funny thing is, it's like it goes back to my bandwidth discussion in the network itself. Actually, when you have more and more opportunities for data to be ingested, you have the better and better optimization capability, compression capability, and how you use that information, where you store it, how often you store it. And we're already seeing evolution in the storage capabilities that are out there that are changing dramatically. So I think that I'm never afraid of like the curve on data going up more rapidly than we can adjust from an architecture perspective, because it's something we think about all the time. Right. So we'll do better and better at optimizing for our cost to serve from a technology perspective, a subscription perspective, as we start executing more and more on our multi-product strategy. Now, that's going to be a little offset from most of our revenue, like 99%, is subscription related. And as you move into the enterprise, you actually need a little bit larger services component. And I'm not saying I want to invest a whole lot in services. I want to create an environment actually where partners lean in and they can take on a big portion of it. But you got to have some. And so that'll be a little bit of a headwind short term, but longer term, I think we can optimize that. Sales and marketing, I would say we invested a lot. And I know we're not running at the scale and the focus and the rigor and the process that we need to. So that's an area where I think we've got what we need as far as investment. Now it's time to drive efficiencies out of it. G&A is similar. G&A was way too high. Now, some of it was not our fault. It was Russia with bad debt that gets recorded in the G&A. It's some shareholder lawsuits that frankly we think are very frivolous, but we have to spend money on it. I will tell you, if a number of us band together on these frivolous lawsuits, there might be the regulatory environment now that we can go after them, but that's a headwind. And then you had some of the acquisition related stuff. I'm a CFO and I said this on the conference call, we will grow and we will grow with the intention of showing leverage.
Yes.
There may be points in time where I'll take advantage of an opportunity to advance our growth. And Command AI is one of them.
Yeah. Maybe last one. If we think about, investors really wanting to balance growth and profitability, how are you thinking about looking at free cash flow per share and free cash flow per share growth as kind of a leading indicator going forward?
Yeah, I think it's a primary metric for us. Now, the good thing is we're pretty simple. We don't have a lot of capital expenditures,
Yeah.
and we don't have a lot of issues with depreciation amortization. Just there's not a lot out there that would be that different from op income, but there's a little. I think the biggest area where you see differences where you have annual advance payments, so you get a cash flow in advance. So, and that's a typical model for us. But I think you'll see us improve op margin, and then that'll flow into free cash flow.
Yeah.
And I'll increasingly drive the enterprise model, which should drive that annual in advance structure as well.
Awesome. I think that's great. Andrew, thank you so much. Thank you
Sure.
for being here.
Thank you.
Thanks a lot.
Yeah.